Hi everybody, this is Liam Martin from Running Remote, and in today's video, we are going to be talking about Wework. Is it going to become the future of remote work, or will it crash and burn? Stay tuned, because I've got my 2 cents coming right up. So Wework, it is probably one of the most exciting companies to be popping up in the IPO space over the last couple years. The only other one that I would think would be a little bit bigger is Uber, but particularly for remote workers and the remote work movement, I think that this is the biggest thing since Slack. So they're going public, and I just wanted to talk about where Wework is and what the implications would be for our community, i.e. the remote work community, with regards to their IPO. So Wework. Does everyone know what Wework is? Hopefully you do. If you don't, basically it is a co-working space. I kind of define it as the cloud computing equivalent to the office model. So you can buy a subscription for either yourself or for the people inside of your company, and they can stay at a whole bunch of different Wework locations. I believe they're in 111 different cities and 29 different countries all over the world. There was a current piece that is on Vox right now, which is actually quite interesting, and they compared it to IWG, which is another huge real estate company, particularly in the office space. In comparison, they have literally like 5 to 10x the revenue of IWG, but yet they believe that they're worth 10x the amount. So that's the next big thing, is valuation. So if we look at this article, the difference between Wework and IWG is pretty big. So they have, in essence, the same global square footage. They have 500,000 members versus 2.5 million members, 528 locations versus 3,000 plus locations. And they lost $1.9 billion last year, and IWG made $500 million. Also, their revenue was $1.8 billion in 2018, and IWG's was $3.4 billion. And they are saying that they're worth $47 billion, when in reality, IWG is worth about $3.7 billion. That's a pretty big enchilada to be able to conceptualize that Wework is worth $47 billion when a company like IWG is worth shy of $4 billion. So there's a couple reasons for that, or at least Wework says that they have a couple reasons for that. Primarily that they are a technology company and they're not necessarily a real estate company. But when you boil down to the nitty-gritty of what they do and what they sell, the profit margins of a tech company are very, very different from the profit margins from a real estate company. Time Doctor, as an example, is a SaaS business. So every time that we purchase a customer, as an example, let's say we purchase a customer for $500, long term, we may be generating $8,000, $9,000, $10,000 from that $500 purchase. Now, that $500 purchase may take us 6 to 18 months to be able to earn back that revenue at the beginning, but the economics really work. They're basically saying that they work like a tech company, that the word of mouth and the long-term lifetime value of these customers are way longer than other business models. I would tend to agree, but I'm gonna hold off my formalized opinion till we go through all the other factors here. 2 other pieces that jump out at me, and I actually read the S1 filing. For anyone that's interested, it's super boring. It's very complicated, but if you wanna read it, I'll link it down below in the comments and in the description. So one of the interesting things in the filing, the S1 filing that is they state that due to technology, they can lower their employee costs by approximately 60%. And this is why they can outcompete against all of their competitors. I personally know from the co-working industry that co-working spaces don't really make money. If you're doing everything right, you're probably doing a healthy 10% net margin on co-working spaces. So if they're saying that they can eliminate 60% of labor costs, that's very exciting, but we've yet to see that come out of Wework as of yet, at least in the examples that I've seen with Wework. Also, they talk about how they have 2,500 social media and community managers inside of all of their co-working spaces, and they see this as a massive advantage, when I actually see this as a massive weakness. Most large companies that I talk to that are thinking about going remote first actually don't want community managers. They want to be able to handle all that stuff on their own. They don't want people to go out in the evenings and have dinner together with a whole bunch of people that aren't directly connected to their company, because that actually creates a lot more poaching opportunities and an HR nightmare for long-term retention. So what they're looking for is to actually keep all of their employees in the same place on a regular basis, or just generally not connected as much to other hiring opportunities. So community managers, actually, from a lot of the enterprise customers that I've spoken to that are thinking about going remote first, do not want that side of the business, but they see it as a strength, when in reality, I see it as a massive weakness. Another strength that they perceive of, which I see as a weakness, is generally their perception that they are a technology company. I think that they're a real estate company and they're not a technology company, unless they magically figure out how to actually, through some type of algorithm, stuff twice as many people in the same square footage of real estate. Fundamentally, you need to be able to house these humans. That's in essence your business model. And I don't see any technology actually being able to come up and make that process more efficient. They're saying 60% cheaper in labor costs. I haven't seen it as of yet. The last thing that I wanted to be able to touch on, which is in the filing, is that the CEO, Adam Newman, he personally cashed out 700 million stocks, cash, and debt. This is really not a good look for someone who is trying to bring their company public, is to literally like pull cash outside of the business, particularly $700 million. And for a company that is going up for $47 billion, but in reality, I would probably say a $2 to $10 billion valuation realistically. They're growing quite quickly, which is exciting. However, they're growing on debt. So they haven't actually gotten profitable. And I believe that they believe that their lifetime value on those customers is actually going to be significantly higher than what it really is. In reality, I don't really care where I put my people as an employer, whether I'm putting them in a Wework co-working space or some other co-working space. It doesn't really bother me. I'm just looking for the most cost-effective solution. And I don't think Wework is necessarily offering that to its clients. So should you buy the Wework stock? Well, it really depends. I think that their valuation is multiples out of whack. So they're currently stating they're worth $47 billion. As I said before, I think they're worth between $2 to $10 billion. I would say the example that Vox put down, which was IWG, which is approximately worth $4 billion and is making like 10x the revenue from a net perspective than Wework, is probably a better buy right now in terms of the short term. Long term, if they continued on along that growth curve, that would be great, but they need a lot of capital to be able to get that going. I think that they're basically being forced to go public because the economy is starting to collapse at this point in mid-2019. And companies like Uber, as an example, that just went public, they just reported a quarter that was absolutely disastrous. So they have to actually bring themselves public to be able to dump the bad debt that SoftBank has, as an example, which was their primary investor, inside of the public market, so that SoftBank can cash out, make their money, and then hopefully not have billions and billions of dollars in debt held on their books from this investment. So I think they may actually indeed be a little too late at this point. It will be very interesting to see what happens over the next 3 to 6 months, but I think they're going to end up to continue to lose money. I mean, they're basically stating they generated $1.8 billion in revenue, and they lost $1.9 billion in revenue to generate $1.8 billion in revenue. That's insane, especially for a real estate company. If you were a software company, maybe I would accept those types of numbers. That's what they are trying to convince you of as the investor. And in my opinion, I would not go for it. I don't have any Wework stock. I don't think I really know people that are intimately connected to Wework stock, but it's not something that I would personally invest in. However, I am very excited to see whether they can pull it off, because I believe the implications for remote work will be significant. I think that if Wework fails, they will be pointing at the remote work movement as the boogeyman that actually started this process, and that it's not a valid model, when in reality, I think that Wework is not a valid model. So I'm concerned about that coming down the pipe. Hopefully that doesn't happen. If Adam ever actually wants to explain himself for the $700 million in stocks, cash, and debt that he pulled out right before the company goes public, come on down to Running Remote. I'd love to be able to interview you about that particular subject, because maybe you have a really good explanation for it. I don't know. So with that said, if you have any other questions about the IPO or anything else, please post them down below. And if you liked this video, why don't you give it a thumbs up? It's free. And if you really like this video, why don't you subscribe? That's also free. And we talk about how to build and scale remote teams all day long. So with that said, I'll see you in the next video.